Good evening, ladies and gentlemen. I am Michelle, moderator for this conference. Welcome to the conference call of Route Mobile Limited, arranged by Concept Investor Relations to discuss its Q4 and FY24 results. We have with us today Mr. Rajdeep Kumar Gupta, Managing Director and Group CEO, Mr. Gautam Badalia, Group Chief Strategy Officer and Chief Investor Relations Officer, and Mr. Suresh Chankar, Chief Financial Officer. At this moment, all participants are in listen-only mode. Later, we will conduct a question and answer session. At that time, if you have a question, please press star and 1 on your telephone keypad. Before we begin, I would like to remind you that some of the statements made in today's earnings call may be forward-looking in nature and may involve certain risks and uncertainties. Kindly refer to slide number 2 of the presentation for the detailed disclaimer. Please note that this conference is being recorded. I now hand the conference over to Mr. Rajdeep Kumar Gupta, MD and Group CEO. Thank you, and over to you, sir.
Thank you, Michelle. Good evening, everyone. I wish you all good health and prosperity. FY24 has been a remarkable year for Route Mobile. We have been able to post our highest quarterly revenue in Q2 and Q3 and register a good growth in H1. We continue to acquire some large customers and deliver unique solutions across industries. The CPaaS industry is facing headwinds since November 23, including enterprise cost optimization initiative, particularly from global OTT, and shift in communication channels. While some of these structural change will take time to stabilize, we remain vigilant to leverage emerging opportunities. Route Mobile strategic roadmap positions us to seize this moment and establish our leadership in the CPaaS ecosystem. The imminent closure of the Proximus deal will bolster our portfolio, extend our global footprint, and ignite our innovation pipeline, creating unparalleled potential for Route Mobile in future. The synergies derived from this partnership will complement our products, geographics, and customer base while accelerating our journey towards the billion-dollar revenue. We have fallen short of our revised guidance. However, we have secured strategic deals and laid the groundwork for a stronger FY25, expecting significant growth in revenue and profitability driven by the synergies within the Proximus group. Some key development of FY24, some new customer wins. We signed a direct contract with leading e-commerce cloud computing company providing CPaaS services across 10 countries, including India. We secured an exclusive A2P monetization deal with VI India, now active since April 1st, 2024. We were appointed as an exclusive partner for A2P monetization with MNO in APAC. We have partnered with Robi Axiata, Bangladesh as a technical enabler sales partner for RCS business messaging. We have installed our map server with Robi, and we want to replicate the same solution with other operators globally. In terms of new product achievement, we pioneered the metro ticket booking across WhatsApp and RCS for select Indian cities, generating the highest user traffic in just 3 hours on WhatsApp business messaging. On the award and recognition, Route Mobile was ranked as Tier 1 vendor in the A2P messaging market impact report by ROCO, excelling in both enterprise and MNO categories. Awarded Juniper's Best Mobile Authentication Solution Platinum Partner Award. Featured as a major provider in Gartner's Magic Quadrant for CPaaS and highlighted in 4 Gartner's Hype Cycle reports. I'm very proud of my team for having delivered a successful financial year and congratulate them on the great performance. Finally, leveraging a solid FY23-24 performance, the Board of Directors has proposed a final dividend of INR 2 rupees per share, following an interim payout of INR 9 rupees per share. Now I will pass it over to Gautam to walk us through the financials in detail. Thank you for your time, and let's continue working towards a successful FY25. Over to you, Gautam.
Thank you, Rajdeep. Good evening, everyone. To start with, we've already uploaded our quarterly earnings presentation on our website as well as stock exchange website. Hope you had a chance to go through the presentation. I'll quickly summarize our financial and operating performance during Q4 FY24 and for the full year FY24 before opening the floor for Q&A. Further to what Rajiv said about the current industry dynamics, there were a few related factors highlighted in slide 14 of the earnings presentation, which affected our growth and profitability in FY24. These factors are, the first factor essentially is MRN's, Mr. Messaging's financial performance was adversely impacted in FY24 owing to geopolitical issues in Europe and a particular client of Mr. Messaging undergoing the industry consolidation. So some of these things affected Mr. Messaging's revenue, and that had a financial impact, on the payout as well as on the impairment that's been captured on the financials. There was a sharp devaluation of Naira, and that had impact on the revenue that we earn in the Nigerian market. And there was a provision for an onerous contract, which is already being renegotiated, and hopefully, if things go fine in terms of the renegotiation of these provisions, will be clawed back or back into the books. In volume terms, moving back to some of the business KPIs, in volume terms, we processed 34 billion transactions in Q4 FY24 and 126 billion in FY24. India continues to be our largest market by termination, accounting for over 48% of our revenue by termination. India termination revenues grew by 19% in FY24. The revenue contribution from U.S. headquartered clients as a percentage of total operating income reduced from 46% in FY23 to 42% in FY24. Revenues from U.S. headquartered customers grew by only 4% during the same period in absolute terms. You may refer to slide 19 for this. Further, Q4 is generally the weakest quarter for Masivian from a seasonality perspective. In terms of the cash flow, we witnessed improvement in the normalized cash flow conversion. In FY24, our normalized CFO to EBITDA conversion was 56% as against 45% in FY23. This is referred in slide 16 of the earnings presentation. We believe there will be marked improvement in the free cash flow generation in FY25. With this backdrop, let me walk you through our financial performance. In terms of Q4 FY24 performance, Q4 revenue from operations grew by 0.8% YOY and declined 0.7% sequentially to 10170 million INR. Billable transactions stood at over 34 billion in Q4 FY24 as compared to 31 billion in Q3 FY24 and 27 billion in Q4 FY23. Average realization per billable transaction declined to 30 paisa compared to 33 paisa in Q3 FY24 due to a significant increase in the domestic volumes in India. Gross profit margin expanded to 21.8% as compared to 21.3% in Q4 FY23 and 21.2% in Q3 FY24. EBITDA for Q4 decreased by 9.4% YOY and 2.9% QOQ to 1204 million INR due to reasons mentioned above. Plus, there were a few expenses related to MWC and few other events conducted by the company during the last quarter. EBITDA margin contracted from 13.2% in Q4 FY23 and 12.1% in Q3 FY24 to 11.8%. Profit after tax adjusted for exceptional items declined by 10.3% YOY and 5.3% sequentially to 934 million rupees in Q4 FY24, with PAT margin declining from 10.3% in Q4 FY23 and 9.6% in Q3 FY23 to 9.2% in Q4 FY24. In terms of the full year performance, FY24, revenue from operations grew by 12.7% from 35692 million rupees in FY23 to 40233 million rupees in FY24. In terms of certain KPIs, billable transactions increased from 107 billion in FY23 to 126 billion in FY24. Average realization per billable transaction was 32 paisa as against 33 paisa in FY23. We had a net revenue retention of 106%. Gross profit margin decreased to 21.4% in FY24 versus 22% in FY23. EBITDA non-GAAP grew by 8.4% to 4949 million rupees in FY24. EBITDA margin stood at 12.3%. In terms of operating leverage, EBITDA as a percentage of gross profit stood at 58%. Effective tax rate for the year was around 15%. Profit after tax adjusted for exceptional items grew by 11.7% YOY to 3720 million rupees in FY24 and PAT margin was 9.2%. Average receivable days increased to 80 days and payable days increased to 66 days we onboarded 43 employees during Q4 FY24 and 53 employees left during the same period. With this highlights, we open the floor for Q&A.
Thank you very much, sir. We will now begin the question and answer session. Anyone who wishes to ask questions may press star and one on their touchtone phone. If you wish to withdraw yourself from the question queue, you may press star and two. Participants are requested to use only handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Nikhil Chaudhary from Nuvama. Please go ahead.
Hey, hi. Thanks for the opportunity. My first question is on revenue growth expectation. Rajdeep, Gautam, we have been guiding our revenue growth each year. What stops us from not giving numerical guidance this year, or any range band you can highlight for growth expectation in FY25?
So let me just answer this. Maybe Gautam can add. Nikhil, I think there is lots of synergies post-deal with Proximus which needs to be planned, and I think that is one reason we are not able to give any guidance at this point of time. Gautam, if you want to add to this.
Yeah, no, so absolutely. So I think we are, expecting the closure to happen anytime now. And once the closure is done, I think a lot of these synergies will be quantified, and some of these are material and will warrant shareholders' approval. So once some of these things are kind of approved by the shareholders, I think it will be worthwhile to then give the guidance for FY25 and beyond. So I'll request you to kind of bear with us for maybe some time before we kind of talk about. But as Rajdeep highlighted, I think some of the large deals have already gone live, like the Vodafone deal has gone live from April 1. So some of those benefits are naturally kind of different flow through now. But the synergy, because these are material numbers and will have a significant bearing on the full year performance in FY25, and hence I think we'll request you to kind of just hold it till we get the minority shareholders approval for the same.
Sure. Can you at least quantify what kind of benefit you are seeing now? Merger is almost complete. While you might not want to classify it between FY25-26, but after the merger, now you have more clarity, more integrated. Can you please quantify how much could be potential benefit or revenue synergy?
So I think it will be worthwhile for us to kind of validate or give any of those guidance once the transaction is closed. So please bear with us for a few days, I think, for the transaction closure, and then I think we can publicly talk about a lot of these numbers.
Sure, Gautam. Also, clearly we are seeing challenges in the ILD revenue side, and ILD revenue continues to decline even in this quarter. Right? Any color and what kind of visibility you have going forward, especially on growth perspective?
So Nikhil,
revenue. Yeah.
So Nikhil, I think we went live with Vodafone Idea firewall on 1st of April. And we do see a growth in traffic at our end, and I think our firewall is doing a fantastic job. There were some leakages which we have identified. I think the Vodafone team is already taking action on it. So I think as of now, we are just 1 month, in terms of our exclusive deal with Vodafone Idea, and we have seen a growth on ILD volume. But I'm sure that volume will grow in coming quarters as well.
Sure. And just to add, Nikhil, I think we had, from an Indian ILD standpoint, I think there was a growth. While it was a single-digit growth, we witnessed growth. So there was no decline per se from an Indian ILD standpoint. I think the decline was largely more from a rest of the world standpoint, more to do with Mr. Messaging and Masivian. And seasonally, it's a weak quarter for Masivian. So some of these things had a little bit of a bearing from a growth in volume standpoint.
Got it, Gautam. My last one is on the 100 crores of line credit facility we have issued for Root UK. Any color what it is for?
Yeah, so this is essentially for a bank guarantee that we have to give it as part of a contractual arrangement. So it is essentially backed by fixed deposits, and since Route Mobile UK is kind of doing it, and the fixed deposits are being held in India, so this approval was warranted.
So what we have mentioned, improvement in cash flow, is including the assumption of 100 crores going for fixed deposits, right?
No, this 100 crore doesn't go out of the balance sheet. So essentially, this is cash sitting on the balance sheet. So This is only a guarantee, which is a non-cash, outside balance sheet.
Yeah, understood. Thank you.
Thank you. The next question is from the line of Kaustav Bubna from BMSPL Capital. Please go ahead. Mr. Bubna, I have unmuted your line. Kindly proceed with your question. As the current participant is not answering, we'll move on to the next question, which is from the line of Dipesh Mehta from MK Global. Please go ahead.
A couple of questions. First, about the onerous contract. If you can provide some detail about the onerous contract where we made some provision. Second question is about the EBITDA margin. I think you indicated 60 bips one-off in the 24. Should we assume that 60 bips will not recur and your margin should be 60 bips higher in next fiscal? Third question is about new product. New product, again, quarter on quarter seems to be down, so more like flattish performance. Even though industry and some of your peers has shown good acceleration. So if you can provide some color around it. Thanks.
So, Dipesh, I will start from question number 3. I don't know what my peer is doing, but as far as our customer onboarding is concerned on RCS or on WhatsApp or on other channel of communication, we are doing fairly well, and we have a great pipeline, and we are definitely looking out to scale this business in coming months. So as a company, I think we are very bullish about this growth potential, which we are right now seeing based on the current pipeline. Gautam, over to you.
Yeah. So just adding to that question number 3. So essentially, Masivian has a very good profile of some of these new products that they have been able to cross-sell a lot of these new products. Unfortunately, this is a seasonally weak quarter. But for Masivian, I think we have overall, grown our new products business meaningfully well. But I think Masivian was, because of the seasonality aspect, a little bit of a drag on the new products growth. Coming to the onerous contract, I think the onerous contract, because of confidentiality and because of the competition sensitivities around it, we would not want to kind of call it out, but we can kind of give you a perspective that this is being negotiated, and once the negotiations are through, we'll be able to kind of get some benefits back to the as a right back to the books. So at this point in time, we'll want to reserve our comments on the onerous contract, but there are active negotiations already happening on this count. And on the second question, I think on the EBITDA margin, so I think Q4 typically we have a little bit of one-off in terms of some of the events that we attend, in terms of our AOP planning that happens, and plus the drag because of MR
plus the variable payout as well, I think.
Yeah. So some of these things, I think, were a bit of a drag, but some of these things should normalize. We are hopeful. I think MRM, should bounce back strongly. So they are kind of working very closely now, I think, across the teams to see whatever synergies they could take from the group. So I think that's where we are.
Yes, just to get further detail about the EBITDA margin, when I was not referring for quarter 4, I was referring from 25, because in your presentation you mentioned 60 bips impact in FY24 because of various factors you highlighted. So my question is more about next year. When you look from margin perspective, do you think that is likely to be fully recovered?
So Dipesh, herein again, as I said, I think there will be a lot of material related party transactions. So I'll request that we discuss this once some of these approvals from minority shareholders.
And just on the onerous contract, whether it is because it pertains to domestic market related business, or it is outside of India business?
No, it is outside of India.
Okay, thank you.
Thank you. The next question is from the line of Amit Chandra from HDFC Securities. Please go ahead.
Yes, sir. Thanks for the opportunity. So the first question is, sir, you mentioned about the changing landscape in which enterprises were looking for cost optimization and also in terms of alternative channels for communication. So if you can please elaborate and started from November onwards. So, how do you see, the situation there? Has it stabilized, and how we, see that shaping maybe in the next year? Because, the shift was mostly from the traditional channel to the OTT channel. And now with the price hike in the OTT channel also, can we see stability in the domestic and the ILD volumes? And also the shift in terms of the channel is not reflected in our numbers in terms of the like new growth areas. Like if you see YOY it is there, but sequentially we are not seeing that kind of growth. So how to read that?
So Amit, let me just start this. I think if you talk about the large OTT players, they have actually cut down their costs and they have not moved their channel to another channel. Like if they're sending OTP from SMS, they have not moved that to WhatsApp or other channels. In fact, as a company, we are already in talks with large OTT players. If they want to shift their channel from A to B, we as a company, we are happy to help them in those areas as well. And we are in talks with various other channels, OTT players, if they to use multiple channels provided by Route Mobile. And as far as the volume is concerned, I think we do see stability now. We see that in last few months, the numbers are getting better from OTT players, and they do understand the potential of SMS being better way to authenticate than other channels because of lots of data security and other aspects which they also believe in. So for me, the next few quarters or coming years down the line, ILD business will flourish and people, OTT players will come to this because for WhatsApp price hike to 2.5 cent makes more sense for them to go for a OTP channel. But there are many companies, if they're looking out to use WhatsApp channel, we definitely as a company will provide those API in various parts of the world.
Okay. And sir, in terms of the VI deal, we're happy to hear that it has gone live. So you mentioned in earlier calls that in terms of the overall revenue potential. So how we can see the ramp up here? So like from first month only it has picked up, or it will take time to ramp up to the fullest potential?
It has picked up from first month onwards. We definitely see a growth coming from large OTT players as well. Because of our firewall, we are able to block lots of leakages which were happening domestically as well as on GT level coming from outside. We were able to mitigate those risks through our firewall, and there are lots of new channels being used for gray routes like a flash call. We have identified those leakages and we shared the entire detail with Vodafone, and we try to put like mechanism on a firewall to block those. So we have definitely seen a growth in ILD business in last month.
Okay. And so my last question would be, mentioned that the weakness is coming mostly from Mr. Messaging and seasonally weak Messavian. So these two acquired entities have been facing problem over the last, I think, 2-3 quarters. So most of the challenges you're seeing are in this portfolio, and if you can elaborate more that what kind of challenges and is there client exits, or if you can elaborate more or give some more color what's happening there.
So as Gautam mentioned, Amit, because of the geopolitical issues, like they were serving some customers in Russia and Ukraine kind of thing, and those customers got impacted. So I think there's a reason behind it, and we are working very closely with Mr. Messaging. As far as Messavian is concerned, I think they're doing fairly well. Q4 for them is always a weak quarter, but as far as the growth is concerned, Messavian is doing fantastically well. On a Mr. Messaging side, we as a group company working very closely with them in terms of supporting them to win more contracts in their region. So I think both the companies are fairly well placed, and whatever dip we have seen in the market because of the certain geopolitical issues in past.
Okay, thank you.
Thank you. The next question is from the line of Swapnil Pottukey from JM Financials. Please go ahead.
Hi, Rajdeep. Hi, Gautam. Thanks for the opportunity. My first question is with respect to the ILD messaging trends, right? Now, you mentioned that some of the weakness that we are seeing is because of things happening outside of India, especially MRM and Massive. Now, the question here is, if that is so, were some of the entities in US which contribute meaningfully to your revenues, the Americas 42% and Europe 14%, do they also include someone like a Facebook, Google, Amazon, and they were the main customers in those particular regions as well, and that is why the impact is there, or it is something very, very regional to those particular geographies?
It's very regional to those geographies. Okay.
And if you could elaborate a bit more, Rajdeep, is it like the Ukraine situation is something which is happening, affecting your?
So, Mr. Messaging, we're working with some large customer based out of Russia. So they had a large contract with them, and because of they're operating from Europe, they've been told to stop working with those customers. So I think that's one impact. I think Gautam, you want to add to this?
Yeah. So I think on the ILD front in India, I think from some of these US headquartered clients, we've been doing well, but it could have been much better. I think for some of these clients, they've been a little cautious about their spends. So some of that, I think, is being reflected across the board. It's not only relevant from a Route Mobile standpoint. It's across the CPaaS industry. But now I think with this WhatsApp pricing, I think they're talking about 2.8 cents. So it's pretty much, close to the parity levels of ILD pricing. So we believe a lot of these things will come back. Some of the issues related to, as Rajdeep highlighted, MR messaging and Messagian are more regional. And once they start to get their traffic back, I think we should do fairly well. But we're waiting for at least some of these ILD traffics to ramp up, especially now with the VI deal going live.
So on that, Gautam, at one point of time you mentioned the VI deal has a potential of around $100 million in revenue terms. Does that figure stay the same, or is there any change? Because that was, I think, 2 or 3 quarters back. So
We continue to serve VI even in the previous year. So adjusted for whatever revenue that gets cannibalized, we should do incrementally about 500-600 crores from the VI deal.
So I think Swapnil, you need to also understand the synergy between Proximus, the Telesign and Route Mobile. And I think keeping that in mind, I think we need to understand that there is definitely a potential where we have a direct access of some of the large US customers which we don't have as a Route Mobile as of now. So we will definitely come up with a strategy as to how to win more large OTT players sitting in US and how to serve directly, working directly with Telesign to win more large accounts. So keeping all those in mind, I think we are very much sure that we will achieve that number of 500-600 crore which we have guided.
No, but is that a change from the earlier assumption that the VI deal will add around 800 crores of incremental revenue to your top line? And now it is just 500 to 600.
No. So, Swapnil, we continue to terminate about 200 odd crores of revenue. We'll be doing that as we speak, even last year, right? So to that extent, that would be revenues that will get cannibalized this year. So that 800 needs to be adjusted for whatever we've been doing last year, right?
Okay. And the other thing is with respect to your receivable days going up meaningfully this year. Now, is it entirely related to the firewall deals, or is there more to it?
No, we realized a chunky bit of payment, towards the first week of April. So that had a little bit of a bearing in terms of the receivable days going up.
Okay, but that jump has been meaningful.
Yeah, it is meaningful. You're right. So it was a large OTT payment, a couple of large OTT payments that we received during the first week of April.
Okay. And this one-off provision, have you already provided for it, or and if you have provided, where exactly will that reflect?
No, it is part of the exceptional items, and you can maybe also refer it as within the cash flow statement.
Okay. So any recovery from over there will not be get reflected in your operating profit. Is that understanding correct then? It will come in other income or somewhere.
Yeah, it will get maybe kind of written back in the same head. Yes, you're right.
Okay. And the last question is with respect to your domestic volumes. How have they moved in the recent past? I mean, is there any incremental addition in terms of clientele? Earlier, you used to disclose that you had you were winning some BFSI clients and all. Has there been any incremental gains over there?
So per se in India, I think we have done fairly well. I think domestic volumes have grown in double digits for India. So there, I think we are very, very bullish.
And this is despite the fact that there is a 20-odd% hike in the NLD pricing. Last
yes,
1 or 2.
Yes, Kapil. Yes, you're right. In fact, we are able to close some large account last quarter, and we already have some great pipeline for this quarter as well.
Okay, Raj. Thanks for that. All the best.
Thank you. The next question is from the line of Shivan Rajesh Kabra, an individual investor. Please go ahead.
Hello. Thanks for granting me this opportunity. So I wanted to ask you about
sorry to interrupt, sir. Your audio is not clear. May we request you to use your handset, please?
Okay, sure. Am I audible now?
Yes, sir. Please proceed. Thank you.
Yes, I wanted to ask you about receivables. So there has been a jump of almost 390 odd crores in receivables. So can you throw some light on that?
Sorry, the voice was not very clear. Can you please repeat the question?
Yes. I actually wanted to ask you about receivables. So there has been a jump of almost 390 crores, which has impacted our cash flows. So I wanted to know about that.
Breaking. I mean, it's high and low, your volume.
Are you on a speaker? I think it's better you just...
Yes, sir. You better use your handset, please.
I'm using a handset. I wanted to... I'm not audible now.
Sir, it's high and low, your volume. I mean, like, the pitch is high and low, so I'm not able to understand.
I think you are asking about the receivables. I think we've just answered it prior to this. I think the query, was on receivables. So I think we received a large payment from a few OTTs and clients during the first 10 days of April, and hence that receivable, the skew that you see there, got impacted.
Okay. Thank you. That's it.
Thank you. Participants, you may please press star and 1 to ask questions. The next question is from the line of Gokul Maheshwari from Africa Capital. Please go ahead.
Yeah, hi, thank you. So my question is that you guys were working on certain firewall deals in LATAM market. Is there any update on that? Hello?
Hey, hi. So I think it is an ongoing, and these are a little confidential kind of information to be shared publicly. So I think some of these things are being kind of chased by the teams, and they're working closely with those opportunities. As and when they fructify, we'll come back to you with an update.
So, secondly, just on the receivables front, if you could just quantify the amount which you would have given as an advance to the telecom operators. I mean, given that it is there in the balance sheet, but the revenue flow has not yet happened for those investments, can you exactly quantify that?
Yeah, so I think on the balance sheet, I think it is called out under the cash flow statement and the notes. So about 448 odd crores is what was given out, and out of which I think we would have consumed about 70 odd crores during the year gone by.
Okay. And lastly, just on the international messaging, could you just give an indication of what is the volume growth for the industry and volume growth or degrowth in the industry for FY24, and how would have Root fared versus the industry performance?
So actually, there is no data published as such, but we have seen a domestic growth in various markets wherever we work in a domestic market, whether it's the Middle East, Africa, or India, or other Asian countries where we directly operate and work with enterprises. We have definitely seen a growth on the domestic front, and as a company, I think we are very bullish to focus more on the enterprise side, and I think that's what I can share, but we don't have any number as such about the overall market growth in last year.
Okay, great. Thank you so much.
Thank you. The next question is from the line of Dipesh Mehta from MK Global. Please go ahead.
Yeah, just one performance number for MRM and Masivian. If you can give some revenue and EBITDA kind of thing, even maybe QOQ or YY some comparison, how they fared. Second question on the receivable. If I look 3 months, above 3 months, it is 18%. It seems to be slightly higher than usual trend. If you can, I understand you said some of the payment you received, but above 3 months, 18 months seems to be on higher side. If you can give some sense.
Yeah, so in terms of, I'll give you the quarterly numbers for Masivian and Mr. Messaging. So, Masivian did about 514 million in INR terms. So there was a 17% QOQ drop there. MR Messaging, they did a 1794.95 million in Q4 FY24. So again, they also witnessed about a 70% QOQ decline. For Masivian, as I highlighted earlier, it was more seasonal. Sorry, what was your other query on the receivables? Yeah, on the receivables, a large part of our receivables also comes from a lot of these PSU clients where there are quarterly settlements. So maybe I think there is a little bit of a skew because of that.
So do you expect it to be that kind of thing above 3 months also, almost 1/5 of your receivables?
So Dipesh, maybe we can discuss it offline. Yeah, so I think we can discuss it offline.
Sure, thanks.
Thank you. The next question is from the line of Ronak Chheda from Aviga Capital. Please go ahead.
Hello. Hi, am I audible?
Yes, sir, you're audible. Please proceed.
Yeah. Hi, Gautam. Hi, Rajdeep. I have a couple of questions. First is on the revenue retention, which is coming at 106%. Now, I understand you've already spoken on the industry not doing well, but how should one look at this number? Is this a sustainable net retention ratio which should be assuming for the business going forward given the environment we are in? That's the first question.
So, Ronak, I think for sure, FY25 looks much better from a growth standpoint, and a lot of these growth will be garnered from existing clients. So I think the NRR should improve materially in FY25. Once I think we will be able to kind of give you more color once some of these synergy approvals are in place with respect to Proximus. I think that point in time we can also touch upon, how we see this NRR improving during the course of this year.
Okay. And the second question is on, we've seen the volume growth, right, on the transactions of around 17.5% for the full year, versus the revenue growth is around 12.5%, right? So when you tie up this, what I think what I'm trying to gauge is how should we look at the volume? Because you mentioned that now there is some volume has gone and exited the system, and some of this has changed the channel. The volumes which have changed the channel should still be part of this number, right? So how should we look at the volume which is exited?
A significant increase of these volumes is attributable to domestic volumes, which is at a much lower realization.
Okay. So for a full year basis, qualitatively, ILD volumes would have grown for us?
No, ILD volumes have increased.
For the full year?
One second.
Yes.
For the full year. Yeah, for the full year, ILD volumes have come up because I think there was a price increase also during the course of the year.
No, I am asking on the volume basis.
Yeah, because of the price increase, the volumes have come off.
Yes.
Yeah, there was a decline in the ILD prices. You're right. ILD volumes, sorry.
So the ILD volumes on a full year basis must have degrown, and a lot of this is domestic, and hence this. And in Rajdeep's opening remark, he mentioned that there are some of these are more structural changes, right, for the industry itself. How are you thinking now for the industry itself to recover from these structural changes? Do you see a case for industry to do a double-digit volume growth over next 3 years, or that would be far-fetched given how the clients are thinking?
So you have to see, Ronak, in a two way. Like, there will be definitely a volume growth going to happen because of the multi-channel approach by the customer. So we will see a growth in omni-channel, whether it's the WhatsApp, RCS, and the email, or maybe SMS. So overall transaction growth is definitely going to be there. And how much is going to be on SMS and how much is going to be on RCS or WhatsApp, probably that is we have to wait and see. But I can just let you, in terms of adoption and transaction growth is happening across the channel, and that is exactly one good thing where we believe as an industry, as a CPaaS. In fact, all the CPaaS companies are now very well placed to offer multiple channels to their existing customer as well as to the new customer. So overall transaction is going to increase in coming years down the line.
Understood. And this Proximus deal is supposed to get closed in next couple of weeks. That is how we should be reading into your commentary?
Yeah, Ronak, I think this month is what I think we are anticipating for the closure, and it should happen very, very soon.
Okay. Thank you.
Thank you. We'll take the next question from the line of Aniket Kulkarni from BMSPL Capital. Please go ahead.
Yeah, good evening, and thank you for the opportunity. So, with respect to this Via India deal, is there any concern regarding receivables given the financial situation of the company, or, I mean, do they pay upfront as the contract unfolds?
So strictly speaking, we would monetize that revenue from the enterprises, collect the revenue, and then pay to VI. So per se, except for whatever is the advance given, there is no, delinquency risk, so to say. But, on a monthly basis also, we keep realizing a substantial chunk of revenue from those enterprises for which we have to settle with DI. So per se, the risk associated is very, very minuscule.
And can you quantify how much advance has been given so far?
So that is again, confidential. So we would not want to divulge it in any public forum. And we are also bound by the confidentiality in the agreement.
Okay, no worries.
So it is part of the number that's already called out in the balance sheet. So we've given advances to few operators to the extent of that 448 crores, which is there in the balance sheet.
All right. And secondly, on the debt front, the debt seems to have gone up on a year-on-year basis. So is there anything particular in this, or it's just normal business?
Yeah, it is just normal. Average maturity of this debt would be like kind of a year.
Okay, so it should return back to, because it went from 140 to around 380 odd crores. So
yeah, that's correct. So a lot of these contracts that we have done, so we would have parked FDs in certain currencies and then taken the debt, and then some of these are on a monthly basis self-retiring.
Okay, understood. All right, thank you so much.
Thank you. The next question is from the line of Devraj Singh, an individual investor. Please go ahead.
Yeah, hi. I had two questions, but one has already been answered. So I just have a small question. I think about 2 or 3 calls ago, you had shared something regarding the intention of Proximus not to take Route private, right? Does that still stand, considering where we are in terms of the equity being tendered, etc.?
Sorry. Can you just repeat your question, please?
Yeah, sorry. So I just want to say that a few calls ago, you had mentioned the intention of Proximus not to take Root private. So does that still stand?
That's indeed still stand, and I think there is no plan of taking Root as a private.
Okay. And the intention was captured in the open offer document as well.
Right, I know, but considering the amount of equity that has been tendered, I was just wondering if anything has changed in that. Thank you for that. And the second question I wanted to ask is that one of the consistent themes has been that the synergies with Proximus will help us get to a better margin profile, right? So considering the deal has been in the works for a long time now, I just want to know what sort of margin profile is all the new products that have been launched. I'm seeing that the new product revenue is approximately 20 to 50 or something like that. So I just want to understand what sort of margin profile are the new products showing?
Yeah, so the new products, I mean, most of the new products entail a much higher margin than the SMS margins. So
right.
It could
that would be around.
Yeah, it could vary from 30% to 75-80%. In case of emails, right? So at a blended level, it should be around that 30-35%.
30% also. Okay, that's what was guided earlier as well. So that's
yes.
Thanks. Thank you so much.
Thank you. Participants, you may press star and 1 to ask questions. The next question is from the line of Ritu Shah from Janak Merchant. Please go ahead.
Hello?
Yes, ma'am. Please proceed.
Yeah, so I just wanted to ask, so what's the purpose of giving a security deposit to the MNOs? As in, is there any risk they have from our side? We're just giving a service, so why a security deposit?
No, it is a contractual negotiation that has happened, and it's essentially a quarter. So they are giving their network exclusively to us to manage it for them, so for which they take the security deposit.
Okay, so if we renew it after 4 to 5 years, once we're done, we get back the deposit, right? And then if we renew the contract, so if we renew the contract, we have to give the deposit again every time?
Yeah, so it depends on the negotiations then, but yeah, this can be rolled over to the subsequent period if the contracts are renewed.
Okay, thank you.
Thank you. You may press star and 1 to ask questions. The next question is from the line of Sangram Kanade, an individual investor. Please go ahead.
Yeah, am I audible?
Yeah.
Yes, sir.
Yeah, actually, one of my questions that when will be the deal closed with the Proximus is already answered, so thank you for that. Secondly, I wanted to ask the 1 billion target of the management. Actually, we missed the profits guidance in the FY24. So is the target still on? And my second question for today is, will the top management in the Root Mobile get changed post the Proximus deal?
So to answer your first question, Sangram, I think we are very much intact with our $1 billion revenue target, and we are working towards that. If you see the kind of work we are doing on different channels, the kind of synergies we are working with our customers, and along with this partnership with Proximus deal, also going to add lots of value to Root Mobile. And I think in terms of management, I think we may not able to share any information as of now. Probably you have to just wait and watch post the deal happens.
Oh, thank you.
Thank you. Ladies and gentlemen, we will take that as the last question for today. I would now hand the conference over to Mr. Rajdeep Kumar Gupta for closing comments. Over to you, sir.
Thank you, everyone. Thanks for showing your interest, and thank you for all your support as an investor. Looking forward for your support again. And once again, thank you once again. Have a nice evening, guys. Take care.
Thank you very much, sir. Thank you, members of the management. On behalf of Root Mobile Limited, that concludes this conference. We thank you for joining us, and you may now disconnect your lines. Thank you.